We are here this afternoon to hear from Robin from the Arizona Central Credit Union. She's going to give us a webinar on building a basic budget, but she has a plethora of knowledge, so feel free to write down your questions because you will get an opportunity to ask questions at the end. And we are so grateful to have Robin, who has partnered with our wellness program in many ways. They've donated gift cards for our health fair and our awards banquet, and they've provided financial classes throughout the trust at various agencies. So we're grateful to have you today, Robin. Welcome.
Thank you so much, Katie. We really have enjoyed the partnership to date, and I've loved working with Katie and able to get out to all 6 of your organizations. I did attend the dinner, I think 2 years ago, which was really a wonderful event. So looking forward to more of these live and in person, and this is actually very special for us to be able to start this series of webinars. We've got topics in the future, so be on the lookout for more of these as we start with Build a Basic Budget. I am going to run through a PowerPoint presentation that's going to go over a 5-step spending plan. And a couple of the activities I have sent along to Katie, which I see she has forwarded to you by way of attachments. So if you don't have them, I can certainly kind of go through them just in a quick overview. But they're great worksheets to have to not only to do briefly, and I'll prompt you during this webinar, but also to take home and do with family members or whoever you communicate, and we'll talk about communication of finances. They're just great worksheets to have, and a lot of this is prompting you to get into the habit of writing some of this down. So that it's in front of you, it's kind of up from the back burner to the front burner so that you retain control of your finances or keep control of your finances. So with that, I'm going to start Build a Basic Budget. Can everyone hear me?
And yeah, we can hear you, Robin.
Great. We normally start in person with a change jar activity. I will bring in a full change jar, pennies, nickels, dimes, quarters, and have people guess the amount. And a lot of that is just so that you understand how little things add up over time. You know, you can use them for daily expenses such as bus money or lunch money, fun money, but also for larger goals like for vacation. I liken this to our You Name It account, which we have in savings, that you can designate the name and just do scheduled transfers for it. So that is what this is. Certainly some of you may already have a change jar at home. A lot of you probably do this already. This is just a good basic seminar and gives you kind of an overview of how to build a 5-step basic budget plan, know how to set up a spending plan, identify various leaks, and we'll go over those, tracking your spending and saving money, setting financial goals, short-term, kind of medium range and long term. This seminar goes over short-term goals. Audit your progress and revise your goals because as we know with anything, if it doesn't fit your lifestyle, then you're not apt to maybe stay with it. So definitely we're going to audit progress, both say monthly, quarterly, and annually so that you do stick with it, and various financial tools that you can use. So let's start with some of the benefits of managing money. Certainly to free up time and do things you enjoy. A lot of times, especially working with Katie and wellness groups, it's better health and less stress. So if you're in control of your finances, it's certainly going to be less stressful on you and those in your household. And so therefore, that's actually one of the line items that I really like to touch upon. You know, other than greater control and peace of mind, obviously, but definitely less stress and better health. So with that, if everybody has their 1-minute quiz, this is certainly something that we don't have turned in. We don't grade. It's really just kind of a fun little one-sheet for you to get an idea of where are you now. Are you in control of your money? Do you have a spending plan in writing? Do you put your financial goals in writing? Do you have an adequate emergency fund of at least 6 months or even 3 months? And Do you keep track of your spending, and how do you do that? Have you calculated your net worth? Do you regularly communicate financial decisions and your finances with family members or those in your household? And are you on track for your long-term financial goals? So, like I said, it's kind of a fun little quiz we hand out just to get an idea of where you are. So with that, if you've taken it, ask yourself a lot of these questions. They're intended to help you identify areas for improvement. You know, I'm going to go down to the bottom left, pay yourself last, because what we want to do is pay ourselves first. So decide on a certain percentage or dollar amount of savings, no matter what that is. And it doesn't have to be some large, huge percentage. If you just get in the habit of anything, it's certainly going to get you on track for savings goals. So certainly some people wait till the end of the paycheck. We're recommending definitely pay yourself first. One of the fun challenges that we bring up in this seminar is the 52-week challenge. And we have those that start at $1 the first week, $2 the second week, all the way to $52 on the 52nd week. So if you did that for a year, you would have $1,387. Some people said, depending on when I start, I want to get the bigger chunks done, so they go backwards, so that you're doing this 4-3-2-1, maybe December if you're doing it for the holidays and you're not having to put away so much at the holidays. We had one creative person who only had 6 months to do that, and so they did it from the two outer ends into the middle because they wanted to save kind of that same amount of money over a 6-month period. So be it $1 a week or be it the 52-week challenge or whatever, definitely think about paying yourself first. Smart financial goals. This is another great worksheet. You've got it under a short-term, medium-term, and long-term goals. And so this is to gain control to set up specific financial goals. So what does that mean? So say you've got credit card debt of $1,200 and I want to pay it off. And that's kind of a big general statement. So how are you going to do that? Because you're less likely going to do that unless you put this method into place and say, I want to pay it off $1,200 within 12 months. Maybe I'll take my lunch to work instead of eating out. Maybe I'll drink regular coffee instead of a latte. So this is an example of specific goal, your $1,200, that's also measurable and adjustable because you're either going to bring your lunch or maybe step down from your lattes. Realistic because it's going to be put within your budget. You're going to pick whatever that amount is, and time-oriented within 12 months. So again, saving $1,200 in a year, what is that a month? Well, it's $100 a month. What's that a week? It's about $23 a week. And what is that a day? It's about $3.29 a day. Tie that back to what you're putting in your change jar, and then all of this, once you've got it on paper, becomes a little more realistic and a little more adjustable within your lifestyle. So that worksheet is for you to take home. It can certainly be used for things like I want to save for a new car, I want to save for a house. Your midterm goals and your long-term goals are at the bottom of that worksheet. And again, this is something good to take home and work with people in your household or with your family. They can be different from person to person. So I would say if you could take just 1 minute, go to the short-term goals section and just jot down some notes and maybe put the amount to save each month and your target date time frame. And that gets you started on that activity. And make sure you're as specific as possible. I mean, that's the goal here, is to think about your SMART goals and be specific, fill in all of those different components, because it does, again, put it on paper, and it does make it easier to follow along and adjust and be realistic. Again, your short term is going to be within 6 months. Your immediate is 1 to 5 years. Your long term is longer than 5 years. So, that's kind of what we're looking at this seminar, is your short term goals. And you want to know the difference, because the budgeting is more for short-term goals, whereas your saving is more your intermediate, and your investing is more your long-term. So what we're doing with a spending plan is it's a basic, straightforward tool. Many people do not take the time actually to write down their plan on how they're going to spend their income. So with no plan, money seems to fly out the window. So a spending plan is going to help you do several things. It's going to be a roadmap that helps you figure out whether you're going in the direction you want to go. It helps you make informed choices about where your money goes, basically leading to a healthier, more enriched life. We go tie back to that wellness portion. It tells you whether you're living within your means, whether your income exceeds expenses. It's also going to help you meet your savings goals and, more importantly, prepare for emergencies. So that, again, also ties back to that 3 to 6 month emergency fund. And without a roadmap for this, you're going to lose possibly control, have more stress, and less likely to achieve your goals. So that's why we're stressing. It's good to write this down and kind of create a roadmap. It's certainly something you can adjust and alter as time goes on, but at least get it written down on paper and get started with that so you can control your financial future. So as you begin your plan, it's important to be flexible. Make adjustments as you go along. It could take several attempts, basically just to determine the categories and the amounts that work for you in a particular situation. So the 5 steps to a successful spending plan are listed on this slide. Let's go through each step in detail so you get a clear picture on how to set up your own spending plan. These here list monthly expenses. We're going to go through these kind of one by one. List all your monthly income and expenses. Help you develop your own budget categories. There are many apps that are also available to do this, and programs on the internet. No matter what you use, make sure it targets the specific categories you want to use. And I kind of pulled up, let's see, it was out of Entrepreneur Magazine, a couple of different financial apps. And you can write these down. We can certainly go over them at the end. But Digit, D-I-G-I-T, Clarity, Money, Capital, and that's Q-A-P-I-T-A-L, and Debitize, D-E-B-I-T-I-Z-E. And then also on our ACC website, so azcentralcu.org, we have financial planning tools as well that are free to use. You're going to want to list all your monthly expenses. So what are some examples of fixed expenses? Mortgage, car payments, utilities. Flexible would be food, clothing, utilities if they're not on a budget plan, and possibly gifts. And periodic expenses are going to fall under your taxes and your insurance. So you can also think of expenses in terms of these 4 categories. So necessary would fall under basic needs like shelter and food, utilities, insurance, medical, debt payments, and taxes. Discretionary would be basically anything not necessary for survival, so such as vacations or entertaining or special clothing, special items. Personal and miscellaneous, examples are going to be unplanned expenses, so those would fall under repairs for miscellaneous. Maybe under personal, that's more your kind of eating out on the fly or your coffees on the go in the morning, things like that. But you definitely want to break that down, and you do not want to make those personal and miscellaneous a catch-all, because you want to really see where your money's going. So this is going to also fall into how you, and you'll see this in the slide here in a second, on how you're going to track these. So it's really important to keep every receipt. If you're going to say, let's do this for the month of September, or as we go into Q4, and do this for the remainder of the year, October through December, you're going to want to, and we'll show you how, set up a system to save all the receipts so you can see where to put these in the categories. But don't just dump in a catch-all category because, again, as you see in something like a change jar, all that little amount adds up, and then you're still not knowing where you're spending everything. A couple of methods to track spending, certainly online banking and some of the apps we reviewed. There are actually people out there, that me included, that still use a checkbook ledger and register. Also keep track with receipts and envelopes or an account book. However you do it and whatever works for you, the bottom line is that you keep track of everything you spend for a month or for a quarter or whatever you deem that time period is, so you can get a really good idea on paper of what you're spending and what category that fits into. You really want to determine where your money goes because the little things do add up. And however you track it, we mentioned this earlier, definitely communicate with either your family or your household or whoever you share your finances with. Definitely communicate. That is a big thing. Meet regularly because you certainly don't want to wait till problems occur. You want to allow maybe all members of the family to participate, including children, because that helps and teaches them how to make good, solid decisions for their finances. You want to identify any of the problems. Is it overspending? Is one person a spender and maybe someone else is a saver? Is there a problem with compulsive or impulsive shopping? Or is there simply just no plan? Listen to each other. Don't blame. Maybe use I feel rather than you don't. And be ready to compromise and negotiate because you want to definitely have everybody on the same page. Especially when you're writing this down to use and going forward. So the third step is to balance your income, so everything that comes in with your expenses, everything that goes out, and these are supposed to be equal. So how does your cash flow? Your goal is to match your income with expenses. So if your income is more than your expenses, then save more. And if your expenses are more than your income, then you probably need to make changes. So either by reducing those expenses or maybe increasing income. Once you start tracking where your money goes, you'll get a sense of whether you're on track or spending less than you earn. Matching income with expenses is a step many people don't make time for. But it's important that you do it. So, again, you're making that first step by just listening to the webinar or filling out some of these worksheets. So definitely do some of these, get your budget plan started, and then make adjustments as you needed to your spending and your savings habits. So savings is an expense category. You want to remember that as you get your expenses under control. And as your income increases, put more money into some form of savings account. So some savings accounts earn more interest than others, depending on how much you have in the account, and as long as you leave it there. So you definitely want to go into whatever financial institution. We'd love to have you come into ours, but wherever you are, go in and make sure that you are in the right savings vehicle for you and that it's working for you and your household or your family. And if it's been a while since you've sat down with someone, either at your bank or credit union, maybe make that appointment and go in and do a little kind of refresher. We're now at the end of the first half of 2018, so maybe this is a good time to go in and say, hey, let's sit down. Am I in the right savings vehicles? Am I going the right direction? So an important financial tool is your cash flow statement, and it tells you where your money went. And it forces you to look where the money's coming in and where it's going out. And again, those two columns should be equal. It's very important to match your income with expenses. So last worksheet we have is your cash flow statement. You're going to begin to identify your budget categories that apply to the specific situations. Cross off the ones you don't want to use. You can certainly tailor this. You can certainly make copies for 12 months out of the year. And an ideal time period to work, obviously, would be January to December. I encourage you to finish the estimate column of the worksheet at home. So I would start, if you know some of these, fill it in, but definitely take this home. Like I said, make copies depending on the time period you want to do it. It's really a good way to look and see where you were last year, as well where you have been this first 6 months of 2018. So this slide is going to show you an example of a cash flow statement. By tracking where your money goes and comparing income with expenses, you can very easily identify spending problems and make adjustments. So savings is considered a regular expense here. And why? So you get in the habit of what we talked about, paying yourself first. So rather than just saving what's left at the end, after you've paid all your bills, you make savings, whether it's $50 or $5 or whatever, an expense. You're more likely to build an emergency fund for when you need it. The refrigerator goes, the car dies, needs a new tire, whatever. Get in the habit of regularly saving each part of your paycheck, no matter what that is, because at least you're developing a good habit, and then you can always increase that down the road. So there's certainly other expenses you can put on here. The more detailed, the better. It's just a good basic worksheet to get you started. Does your plan fit within your goals? This goes back to the review and communicate. We've talked about tracking methods, so track expenses, on your computer, your app, receipt method, envelope, checkbook, ledger, whatever. After you find your spending leaks, analyze your plan and see if that fits with your goals, and analyze, revise. What are some of the changes you'd have to make once you've analyzed and revised? Do you eat less fast food? Do you drink fewer sodas and lattes and just make coffee at home? Do you have to get a part-time job because you have to add more income? Are you bartering services? One example is, babysitting. Another would be, any type of what you do professionally in order to maybe cut down expenses. Perhaps delay some purchases, or something as simple as books from the library versus the Barnes & Noble addiction. Definitely look at raising possibly insurance deductibles, but certainly look at bundling insurance that would save you money. Brown bag it is something certainly always simple. We'll go over don't grocery shop hungry. And we'll also talk about a step-down theory for purchases. So some of the pitfalls that can throw a wrench in your plan. Here's some basic everyday. You're certain that you could add some more to this. Ignore repairs. What happens when you ignore repairs? They only get more expensive. If you look under lights left on, which is in the top right-hand corner, I also add don't leave the ceiling fans on. Had a long discussion with some very nice gal at APS who told me definitely turn the ceiling fans off when you leave the room, because according to my husband, it keeps the house cooler all day, and according to APS, we're just paying them more money. Leftover food, that is going to tie into going to the grocery store hungry and maybe buying too much more than you need. Water left running, parking tickets, and late fees. All of this would be adding up to drain your budget. So some practical money-saving tips. Use credit wisely. Pay off your debt with the highest interest rate first, making minimum payments on all others, again, to avoid late fees. Maybe consider consolidating your debts. Again, the debts with the higher interest rates first. Ask your credit union or maybe your financial institution to run the numbers to determine whether refinancing, either a mortgage or even an auto loan, might make sense for you. So again, go back to your institution and make an appointment and sit down and have them work with you and for you, so that could quite possibly save you some money. Again, we talked a little bit about bundling your insurance coverage with one company, maybe to take advantage of discounts for doing that. Definitely call 3 or so to make quotes, because you always want to be able to compare quotes from multiple companies. And that goes for darn near everything, not just insurance bundling. So When it comes to a big purchase, obviously get as many quotes as you feel comfortable with so that you can comparison shop. Shop for a credit card that you like. Consider an annual fee. Consider the interest rate, the grace period, cost of late fees, and over the limit fees, and all those little odds and ends that do definitely add up. And certainly use credit wisely, as that ties back to the first bullet point there. Simple things that I'm sure you already know. Only charge what you can afford to pay in full. Eliminate late payment fees and pay bills on time. So even some more money saving tips. Don't forget to mail in rebate forms under use rebates and coupons. Some people may not think coupons are sexy, but coupons are going to save you money. So we can certainly all get them on our apps these days and on our phones. We don't have to sit and clip them. But either way, however you use them, it certainly saves you from paying full retail. Simple things like adjust the thermostat. Again, I'm going to put in turn off the ceiling fans if you're not in the room. Make savings a habit. We've talked about paying yourself first. Using payroll direct deposit and automatic transfers in order to save. Drive sensibly, and that's going to tie into one of the leaky faucet drops of not accelerating quickly out of an intersection, because that certainly would eat up gas faster. The ever popular don't go grocery shopping when you're hungry, and making brown bag lunches, and also I would say coffee at home. I am certainly guilty of the drive-through coffee, so trying hard to just drink a regular cup of coffee at home instead. The step-down principle that I referred to can be applied to anything. An example that we use for this seminar is something as simple as purchasing clothing. So if you look at the top rung on the stairs, that would be your high-end department store. The next step might be a discount store. The one below it may be a factory outlet, maybe a consignment store, and the bottom rung would be a thrift store. Or even a garage sale. So the more steps down, the greater the savings. I think this is going to work for darn near anything. It could work for you want to go out once a week and eat dinner. So there is your different step down as to where you're starting with a very expensive restaurant all the way down to just taking something home from the grocery store, from the already prepared section. Buying a car, shopping for vacation plans. And so this can be used pretty much for anything. And what it does is it gives you an awareness of your spending habits. And it makes you look at a variety of purchasing options. So that kind of ties back to multiple quotes on when you go to purchase something. And you change your purchasing frequency if you're going to look and see how I want to step down and how often do I want to do this. So some of the resources for saving money, a couple of these websites, americasaves.org, U.S. Department of Energy, energy.gov. I certainly want to send you back to our website, azcentralcu.org. Lots of good tools on there, and certainly some options that you can go in and talk to people directly at a branch. So what's important in step 5 of this 5-step process is to go back and look at all we talked about. Track your expenses regularly. Again, whatever format works best for you. Pay your bills regularly to avoid the late fees. Balance your checkbook regularly, or however you do that with an app, whatever process you use, so you know where you are. Review. Now this says review goals annually, and I really suggest that from here forward, you look at it monthly and or quarterly, because I think if you let a whole year go by, all of a sudden you're not making the changes as fast as you might want to, but definitely after a major life change. And does this spending fit within your goals? Again, this falls back to the communicating with your family and with your household. Is this something I need to adjust? Is it realistic? Am I going to stick with it? I match this up to any of the diets we've all maybe tried in the past, where we get 2-3 days or a week into it and it doesn't fit for us, so we just stop completely because we didn't adjust it. So Certainly, does the spending plan fit within your goals? And if not, how do we adjust it so we stick with it? Develop your own personal plan now. So take the worksheets that we've provided, find your spending leaks. Take your SMART financial goal sheet home and figure out what your short-term goals are. Are they to pay off something or are they to save for something? What's your mid-range goals? Is it you want to buy a car in the next couple of years or you want to save for a house? And then your long-term investing for your retirement goals. Track your spending, whatever way works. From there, you're going to create that spending plan with your cash flow statement, and you're going to audit and adjust the goals, and you're going to review monthly, quarterly, annually, whatever works best for you to stick with it. But remember, little tagline here, that we can certainly help you with all your financial needs. We are a full-service credit union. We've been around 78 years and have 2 locations in Flagstaff and 10 around the state. And then we're also part of the shared branching network, meaning you could go not only around the state of Arizona, but around the country. And on our website, if you look under locations and scroll down, there is a search and a map area where you can put in say you're traveling to Montana, put in your zip code or your city, and it will give you a list of the credit unions that we participate with in shared branching. So while you're traveling around, you will be able to find locations where you can make simple deposits and withdrawals and payments on loans and whatnot without incurring fees, and the same with the ATMs. And with that, I thank you and I open it up for questions.
Thank you, Robin, so much for your time. I'm going to unmute all the lines so that if we have any questions, and I just want to say thank you, because as someone who's been trying to do budgets and savings, I'll share a little personal story. I followed all the plans. I was completely credit card debt free. I was so excited. I had 10 grand in my savings, and I felt like, good about that. And then I had probably the worst year of my life. We had a huge family medical crisis, water leak in our house. It looks like I'm getting some feedback from someone. Hold on a second. And we had all the crazy things happen, but we were so grateful that we had the savings to fall back on. That helped out a lot. So thank you, because we know it's so related to our stress and our overall well-being when we don't have the money to fall back on when we need it.
Well, that's a big factor of it, and that's why I loved partnering with you, over a year ago, was that I could really touch upon the wellness side of it, that it truly does affect you, physically, mentally, emotionally, and, we know it affects us financially, but from a wellness standpoint, once you are in control or you feel you are more in control, it's really a better quality of life. So that's why I said, don't get caught up and hung up on, it has to be this number or this amount.
Right. So at this time, everyone is unmuted. If there's anyone who wants to go ahead and ask a few questions. No. Do we have any questions? Keep going. I'm going to we'll post the recording of the webinar. But I want to say thank you to everyone who made the time to be here today.